Picture this, you've got $10 million in Bitcoin and your private bank now offers you a flexible facility where you can borrow up to 40% of the value of your coin. What is happening now is that wealth management and private banks are coming on board with digital assets. What that means for you as a client is that if you've got Bitcoin and you're holding on to it for the longer term, you don't need to sell it. You won't crystallize a capital gains tax liability and you're getting liquidity. How does that work? Well, if you've got $10 million in coin, you can borrow up to 40% loan to value, which gives you $4 million as an overdraft facility. This particular wealth management private bank would like to see $3 million that's available for you to take out and do with what you wish. It can be a deposit for a house, buy a private jet, buy that dream super yacht, holiday home, etc. That money is for you to do what you want to do with it. The key thing for them is that they would like to see $1 million managed in a traditional wealth management portfolio for the longer term. What we would like to see and what we're recommending to our clients is that with that £1 million that's invested into what we call assets under management with the bank, that money stays with the bank. It can be invested in bonds, equities, and those things can then generate enough income if the performance performs well to cover the cost of your borrowing. In other words, the loans will pay for itself, which is fantastic. Hello, and I'm Paul Welch, the finance expert. And today, we're exploring one of the most fascinating shifts in wealth management and traditional private banking that is now happening, which is fantastic news. For decades, private banks were rooted in equities, bonds, property, family office structures, while Bitcoin was dismissed as too risky, too volatile, too unregulated. But the game has changed. What is happening is now one of the private banks is now not just acknowledging crypto, they're lending against it. In some cases, up to 40% loan to value. Let's break that down. If you're a long-term holder of Bitcoin, the last thing you want to do is sell. Selling means crystallizing capital gains, potentially triggering a tax liability, and also losing your potential upside exposure to Bitcoin. With this new private banking strategy, you don't have to. Instead, you can borrow against your Bitcoin. And at 40% loan to value, if you were holding $10 million worth of Bitcoin, you can raise $4 million in liquidity. That liquidity is flexible. It will allow you to diversify into other investment asset classes if you wish. And what I mean by that, it can be used to diversify into new asset classes. You can buy property, fund your lifestyle, or reinvest back into the markets. For many of my high net worth clients, this is a way of unlocking capital without giving up on their conviction in Bitcoin's long-term asset value. Let me give you an example. Imagine you're sat on $10 million of Bitcoin. You may be sat on 5, 3, or 1, but the same math apply. You approach a private bank with us. We then grant you a facility working with them of up to $4 million. $3 million is released back to you. $1 million stays with the bank. You can then invest those proceeds as you see fit. Generally speaking, what we are seeing is that the $4 million out of that amount, $1 million is retained with the private bank, $3 million comes back to you. If you want to invest all of those proceeds, then that is possible. But the great advantage is these investments are structured to generate enough income to service the debt. In other words, the loan pays for itself. That's the beauty of this strategy. It allows you to maintain your Bitcoin exposure while using traditional investments to cover the borrowing costs. Now let's take it a step further. If you're happy with Bitcoin risk from an investment perspective, and many of my clients are, you can now possibly consider by borrowing in Swiss francs. Why? Because the Swiss national base rate is currently 0 and banks are lending on Bitcoin at a margin of around 2.5%. That makes borrowing incredibly cheap. Imagine paying 2.5% to access $4 million in liquidity. That's a rate many entrepreneurs and investors find extremely compelling. Of course, this isn't without risk. Borrowing in Swiss francs introduces currency exposure. If the franc strengthens significantly against your base currency, your cost of borrowing rises. So this strategy isn't for the faint-hearted. But if you're a sophisticated investor who understands both Bitcoin's volatility and can accept some foreign exchange rate risk as well, it's a powerful way to optimize borrowing costs while keeping your digital assets intact. Let's be clear, this isn't a strategy for everyone. Bitcoin is already a high risk, high volatility asset. Adding leverage on top of that increases the stakes even further. And also, if you're adding currency exposure, you're at the highest level of risk you can possibly accept as an individual investor. If Bitcoin falls significantly in value, the bank will require additional collateral or a partial repayment of the loan to remain within the loan to value guidelines of your facility. And as we started, that will be about 40% of the value of your coin. This will be known as a margin call. And if you've borrowed in Swiss francs, you've also exposed to currency swings. So you're dealing with at least two layers of risk: Bitcoin volatility and FX volatility. That said, for high net worth individuals with diversified portfolios, these risks can be managed, and in returns, the rewards can be significant. So why are traditional private banks offering this now? This is only just starting to happen, and the answer is demand and competition. Wealthy clients are holding billions in Bitcoin. They don't want to sell, but they want liquidity. If traditional banks don't offer a solution, clients will look to specialist lenders and work with professionals like us to assist them. By stepping into the crypto-backed lending space, banks not only retain client relationships, but also bring digital assets into their traditional wealth management ecosystem. It's a win-win. Clients get liquidity without liquidation, and banks expand their product suite to remain competitive. This is really part of a bigger shift that we are now starting to see with traditional private banks moving into the digital space. The old world of wealth management, built around stocks, bonds, property, and cash, is merging with a new world of digital assets. For the first time, Bitcoin isn't being treated as an outsider. Bitcoin is now being integrated into core banking strategies, and as legacy banks invest in technology and systems to support digital assets, we're going to see even more innovative products emerge. Everything from crypto credit lines to structured notes linked to digital assets. What does the outlook and future hold for this? Well, we're still at the beginning of this journey. 10 years ago, no private bank would touch Bitcoin. Today, they're lending against it. 10 years from now, it's entirely possible that digital assets will sit alongside equities and real estate as a standard component of every wealth management portfolio. For those who understand the risks and position yourselves early, the opportunities are potentially enormous. So if you're holding Bitcoin, if you don't want to sell, and if you're looking to unlock liquidity for investment, property, or lifestyle, this could be the strategy for you. The key thing is understanding the risks, structuring the borrowing correctly, and working with a bank or advisor who knows both the traditional and digital sides of finance. If you found this video valuable, please remember to hit the like button, subscribe to the channel, and share it with someone who needs to hear this. And if you'd like to explore how Bitcoin-backed lending or Swiss franc borrowing could potentially work for you, then please drop me a DM in the comments below. And we're always trying to make the impossible possible, whether it's jets, yachts, art, car, wine, real estate, and also your crypto. Thank you for watching.